No, we never thought of leaving the UK. The UK is very important for us. We have a very large, it's actually the largest balance sheet of all the countries where we operate. It's a high quality, low risk business, predictable returns in hard currency, in sterling, and this helps stabilize our risk return profile. So the UK is and has always been a very important and core component of Santander's diversification strategy.
So, sir, your UK division has been underperforming the rest of your bank. Pre-tax profit was down almost 40% last year. So how would this acquisition help you boost profitability in the UK market?
We think this transaction will help us accelerate the transformation program that is already in place in the UK. Last year, the UK earned around 11% return on equity. We think it can go up on its own by around 1 percentage point per year to, let's say, 14% in 3 years. This transaction will help us get to 16% return in 2 to 3 years. So not only is it going to accelerate the transformation plans, but it's going to help us earn higher profitability. The transaction is being done at a return on capital of over 20%, and it will be accretive from year one. So this is it not only makes sense strategically, as I said, the UK helps with our risk return profile, but it's also financially very, very compelling.
So, of course, this comes in the context of Sabadell trying to fend off a takeover from BBVA. So now another Spanish player kind of jumping into this saga that has been going on for more than a year. So are you concerned about potential legal ramifications there of this deal on TSB?
We are completely neutral on the Sabadell BBVA transaction. This is an asset that becomes available in one of the countries where we operate, and it's our fiduciary duty to look at all these opportunities and try to do the best for our shareholders and also for the customers of both Santander UK and TSB. TSB customers now will have access to better technology and to a bigger physical distribution network. So for our shareholders, for our customers, this is a better transaction.
Morning, it's Karen jumping in. Now, we spoke to Anna Botkin in recent times about doing M&A, and the verdict was that you don't need to buy or sell anything to conduct some M&A. If you proceed with this deal, the £2.65 billion is a fairly significant chunk of money. Does that mean you're out in terms of other M&A for the banking landscape?
No, we have a very clear capital hierarchy. The first and most important use of our capital is our own business. We are investing the capital on our own business on the day-to-day at 23% return on equity, more or less. Obviously, again, we have the duty to look at any potential bolt-on acquisition in the countries where we operate. But we have set a very, very clear financial target to look at these transactions, which is 20%, which is more or less the same we are making on our own business. And this transaction meets that criteria.
The third largest player in the UK market is where you would get to on the back of this transaction. What do you want to do with that scale? What can you achieve that you haven't done so far in the UK?
Well, gaining scale in these days is really, really important because it can help us invest in technology, in digital channels, etc., more and faster. And I think this is one of the key reasons why we think this is a great transaction for Santander customers and for TSB customers. We will be serving 28 million customers in the UK, and we will be able to apply our technology, our One Transformation program, which basically has complete new technologies to a bigger, larger customer base, and that will generate economies of scale and scope. And the client, the customers, clearly will benefit from that.